of asset disposal account. Asset disposal account is designed to provide a complete and clear view of all the transactions involved in the sale of an asset under one account head. The concerned variables are the original cost of the asset, depreciation accumulated on the asset up to date, sale price of the asset, value of the parts of the asset retained for use, if any, and the resultant profit or loss on disposal. Why we are going to prepare the disposal account here is to know the correct, complete and to know the correct or the clear information about the disposal of the asset. Again, the balance of this amount is transferred to the profit and loss account. So when coming to the disposal account, what balance amount we are going to have in this, that particular amount will be transferred to profit and loss account. If the asset is sold, if you are getting profit on this, the profit will be transferred, or if you are getting any loss, that particular loss will be transferred to the profit and loss account. And this method is generally used when a part of the asset is sold and provision for depreciation account exists. Under this method, a new account titled asset disposal account is opened. The original cost of the asset being sold is debited to the asset disposal account, and accumulated depreciation amount appearing in provision for depreciation account relating to that particular asset till the date of disposal is credited to the asset disposal account. The net amount realized from the sale of the asset is also credited to this account. The balance of the asset disposal account shows profit or loss, which is transferred to profit and loss account. The advantage of this method is that gives a full picture of all the transactions related to asset disposal at one place. The journal entries required for the preparation of asset disposal accounts are: the number one is asset disposal account debtor to asset account for the asset which is being sold. And then we have for the provision of depreciation, where the journal entry will be provision for depreciation account debtor to asset disposal account. Then we have one entry for disposal of asset when bank account debtor to asset disposal account. Asset disposal account may ultimately show a debit or credit balance. The debit balance on the account indicates loss on disposal and would be dealt with as follows: profit and loss account debtor to asset disposal account. So the credit balance of the account profit on disposal and would be closed by the following journal entries: asset disposal account debtor to profit and loss account. For example, Karan Enterprises has the following balances in its books as on March 31st, 2005, where the following balances were: machinery gross value 6 lakhs, provision for depreciation 2,50,000, a machine purchased for 1 lakh on November 1st, 2001, having accumulated depreciation amounting to rupees 60,000, was sold on 1st April 2006 for rupees 35,000. The asset disposal account will be prepared in the following manner, where the ledger format will be the same: date particulars journal folio amount, date particulars journal folio amount, and the title will be Books of Karan Enterprises Machinery Disposal Account. So now the machinery which was purchased, that will be debited first here. So in the debit side, April 1st, 2006, machinery 1 lakh. Again, the provision for depreciation and the sale price will be considered in the credit side, where April 1st, 2006, or we are going to consider the closing date here, and the entry will be provision for depreciation account 60,000. Then the sale value will be considered, bank 35,000. Then the account will be closed here. So we are getting the debit side total balance was excess 1 lakh rupees. Same balance we are going to consider in the credit side, 1 lakh. 1 lakh minus 60 plus 35, 1 lakh minus 95,000, the balance will be 5,000. So here If the balance is in the debit side, it means that it is a profit. If the balance is getting in the credit side, it means that loss. So the loss will be considered here 31st March 2007, and the entry will be profit and loss account in bracket loss on sale, amount will be 5,000. Then we will see how machinery account will be prepared here, where coming to machinery account, the balance will be brought down to the debit side, which is 6 lakhs, and the disposal of the machinery is 1 lakh will be considered in the credit side. Then the total will be 6 lakhs and 6 lakhs both the side. Then balance carried down, balance brought down, which will be 5 lakhs balance carried down in the credit side. Then again in the debit side, balance brought down 5 lakh. Let us take illustration where we have to prepare a asset account and depreciation for provision account. So when coming to the illustration, on Jan 1st 2001, Khosla Transport Company purchased 5 trucks for rupees 20,000 each. Depreciation have been provided at the rate of 10% per annum using straight line method and accumulated in provision for depreciation account. On Jan 1st 2002, one truck was sold for 15,000. On July 1st 2003, another truck purchased for rupees 20,000. On July 1st 2003, another truck sold for rupees 18,000, which was purchased for 20,000 on Jan 1st 2001, and a new truck costing rupees 30,000 was purchased on October 1st 2003. So here we are required to prepare a truck account and provision for depreciation account and truck disposal account for the year ended December 2001, 2002 and 2003, assuming that the firm closes its account on December every year. So here the firm is following a financial year as the calendar year, where it starts with Jan and ends with the December. Now by this information, let us prepare a truck account in the books of Khosla Transport Company, where the ledger account format will be date, particulars, journal folio, amount, date, particulars, journal folio, amount. So wherever we have purchased, we are going to record in the debit side. Wherever we are supposed to charge the depreciation, or we have to show the disposal, that will be shown in the credit side. It means that debit what comes in, credit what goes out. Whenever the asset was purchased, it will be debited. Whenever it is sold, it will be credited. So here the asset was purchased for rupees 1 lakh. So here we have purchased 5 assets which is costing 20,000 each. So each truck is costing 20,000. So 5 truck cost will be 1 lakh. That will be recorded in the debit side. So debit side, Jan 1st 2001, bank account in bracket purchase of truck, and in amount column 1 lakh. So here depreciation account was prepared separately, so no depreciation will be shown in the asset account. So first year we have only asset here, that will be recorded, and same total will be considered from debit side to credit side. 1 lakh from the debit side and same total in the credit side 1 lakh, and the difference will be 1 lakh balance carried down and balance brought down to the next year. Balance carried down date will be the closing date 31st December 2001, and the opening will be 1st Jan 2002. Balance brought down in the debit side 1 lakh. Then again coming to the year 2002, the truck was sold or it was disposed. So that entry we are going to record here in the credit side. Again Jan 1st 2002, truck disposal account 20,000. Then again we are going to close the account 1 lakh in the debit side, same total to the credit side 1 lakh. Then again 1 lakh minus 20,000, 80,000 balance carried on the closing date 31st December 2002. Then again in the next year 1st Jan 2003, balance brought down 80,000. Then again coming to the third year, we have one purchase which is on 1st October. So it will be recorded again in the debit side 1st October 2003, bank account in bracket purchase of new truck, which is 30,000. So in the amount column 30,000, and again in the opposite side in the credit side in the year 2003, July 1st we have again sold one asset which is costing 20,000, where it will be recorded again in the credit side. 1st July 2003, truck disposal account 20,000. Then we are going to close the account. Again debit side total 80 plus 30,000, 1,10,000. Same total in the credit side 1,10,000. Then again minus 20,000. The difference will be 19,000 on the closing date 31st December 2003. Balance carried down 90,000. Let us prepare truck disposal account where the format remains the same. Date particular journal folio amount, then again date particular journal folio amount. The asset which was sold we are going to show in the debit side, and the descriptions where we have charged depreciation and the sale value and the profit or loss we are going to show in the credit side. So now the asset was sold for rupees 20,000, that will be considered in the debit side. Jan 1st 2002 asset account, it will be 20,000. Then again in the credit side we are going to show the provision for depreciation on the same date, Jan 1st 2002, provision for depreciation 2000. Then again the sale price we are going to show on the same date, bank account, in bracket you can write sale of the asset 15,000. So again we are going to show the profit or loss on this particular sale. We have a loss that will be shown again in the credit side on the same date, profit and loss, in bracket loss on sale of asset 3,000. Then we are going to consider the total for both the side. It was 20,000 and 20,000. And again another asset was sold on July 1st 2003, that will be considered in the debit side again. So in the debit side July 1st 2003 asset account 20,000. Then again in the opposite side we are going to show the provision for depreciation where depreciation was 5,000. So machinery was used for 2.5 years. First year depreciation will be 2,000, second year depreciation 2,000, and third year it was used only till July. So 6 months depreciation will be 1,000. So total depreciation will be 5,000, and machinery was sold for 18,000, and it will be considered here again on the same date July 1st, bank account 18,000, asset sold. So now when coming to the total here, we have excess total in the credit side. It means that the machine is having profit of rupees 3,000. So the same total will be considered in the asset side, 23,000 and 23,000, and the difference what we are getting is 3,000. That will be profit and loss account, in bracket profit on sale of asset. Now let us prepare provision for depreciation account where the format remains the same. Date particulars journal folio amount, date particulars journal folio amount. So here whatever depreciation we have charged, that will be considered in the credit side, and if the depreciation was charged on the disposed asset, that will be considered in the debit side. So now first depreciation we are going to take in the credit side, which is charged on 31st December 2001, depreciation 10,000. In the first year we don't have any disposal of account, so the same balance will be carried down and brought down. So credit side total 10,000 and the same total in the debit side 10,000. Then again balance carried down and balance brought down to the credit side 10,000. And again the second year depreciation we have, which is charged on 31st December 2002, depreciation 8,000. In this year we have a disposal of account where the depreciation charged on the disposed account will be shown in the debit side. So on the date Jan 1st 2002, truck disposal account 2,000 rupees. Then we are going to close the account. Credit side total 10,000 plus 8,000, 18,000, and same total in the debit side 18,000. Then the difference will be the balance carried down, 18,000 minus 2,000, 16,000 balance carried down and 16,000 balance brought down. So now again when coming to the third year, we have a depreciation of total 6,000, 1,000 plus 750 that we are going to consider in the credit side on the closing date 31st December 2003, depreciation in bracket 6,000 plus 1,000 plus 750, and the outer column value will be 7,750. Then again coming to the third year, we have one machinery disposed. On that depreciation charged is 5,000, that will be considered in the debit side. So coming to the debit side, Jan 1st 2003, asset disposal account 5,000, and the account will be closed here. Credit side total we have 23,750, same total should be considered in the asset side. Same total should be considered in the debit side again, 23,750, and the difference will be 18,750 balance carried on 31st December 2003.